We have some futures that we're going to go over the data for. Interesting reports. Let's get to it. So, some of y'all may be wondering, why are we going over futures reports if this channel doesn't really go over futures? It's a good question. Futures does play a role with stocks. As an example, we're going to be going over crude oil. Some may say, well, if we're not investing crude oil futures, why are we even talking about it? Well, crude oil deals with crude oil stocks. Gasoline, how about refineries? What about silver, gold, copper, any of that stuff? Well, there's mining companies that have stocks. Some very prominent companies, the largest mining companies in the world, have stocks. And it's very important to whether they're mining as much as they think, whether they're getting the amount they want, whether they found a spot, whether their current mine is running out of material. It's all very relevant to stocks. It doesn't mean it's just for futures. So let's go get into crude oil futures. Yesterday's trading session was in the green by 2.78%, following surprise crude oil inventory and production cut last week. In this week's weekly petroleum status report, the Energy Information Administration, EIA, said crude oil stockpiles fell by 1.54 million barrels during the week ending March 8th. This was contrary to expectations for a 1.35 million barrel increase. U.S. oil production declined by 100,000 barrels per day last week and averaged 13.1 million barrels per day. This is up 900,000 barrels per day from 1 year ago. On the oil products side, distillate inventories rose by 888,000 barrels, also contrary to expectations for a 150,000 barrel draw. Distillate inventories are now 7% below the 5-year average for this time of year. Gasoline inventories fell by 5.66 million barrels, above forecast for a 1.9 million barrel draw. These stockpiles are now 3% below the 5-year average. The EIA said gasoline production increased from the previous week and averaged 9.9 million barrels per day. Distillate production also increased from last week, averaging 4.6 million barrels per day. The agency also reported that U.S. ethanol production was lower last week, averaging 1.024 million barrels per day. Expectations were for 1.045 million barrels per day. Ethanol inventories also declined last week and now total 25.78 million barrels. Traders were expecting inventories of 26.2 million barrels, so just keep that in consideration when you're trading, what a lot of the institutions are expecting, because they trade heavily on that. So diving a little bit further into the EIA's report, refinery utilization increased by 1.9% percentage points to 86.8% last week versus expectations of an increase to 85.8%. U.S. gasoline demand rose by 31,000 barrels per day to 9.044 million barrels per day. Distillate demand declined by 699,000 barrels per day to 3.375 million barrels per day. Oil inventories, including Cushing, Oklahoma, the delivery point for the WTI crude oil futures contract, fell by 22,000 barrels last week to 31.451 million barrels. The U.S. crude oil rig count declined by 2 to 504 rigs during the week ending March 8th. That's down 14.6% from a year ago, according to energy services firm Baker Hughes' North American Rotary Rig Count report. And this morning, U.S. stock index futures moved higher into early market hours, with the S&P 500 0.34% up, NASDAQ 100 0.48% in the positive territory, and the Russell 2000 0.34% as well in positive territory, while the Dow Jones Industrial Average was 0.32% up. So all good. In Asia, the major indexes finished mixed, with the Nikkei 0.29% higher, the Hang Seng 0.71% higher, and Shanghai 0.18% lower. European trading saw the DAX up 0.17%, CAC 0.74% up, and FTSE FTSE, up 0.04%. So it's moving higher by midday, not much though, by any means. Silver futures closed higher on Wednesday at 3.12% higher, with the lead month May contract closing at its highest level since December. Expectations for central bank rate cuts later this year, weakness in the US dollar, and rising industrial demand were seen as catalysts for silver price rise. Now, remember this, if we're going to be seeing some of this in our stocks, it's going to be some of our mining stocks, some of our processing stocks, at some of our mills that we're going to be having, bringing in this raw material. What about some of the fine extracted material? Who's going to be selling it? Who's going to be buying it? It's all very important to look at, even though it's just silver futures. Copper futures closed in the green on Wednesday, up 3.26%, trading at its highest levels in 7 months. Reports that major Chinese copper smelters agreed to reduce production at unprofitable operations sparked buying interest in the red metal. So, what does that mean? What if there's a smelter that has tons of copper that they're building up to sell? Is that good? Is that bad? We have to process all that. That's where we look at all these reports. Even though we're not trading futures, that's why I find it very important to read all these futures reports. At least for me, it helps with my trading. Maybe consider it. Talk to your broker about it. So reports that we're going to have to be looking into: producer price index for February, interest rates, stock index, currency, gold futures. It's all something to consider. Weekly initial jobless claims. Again, interest rate, stock index, gold, US dollar futures, all that stuff. Retail sales for February. Business inventories. The EIA, the Energy Information Administration's weekly natural gas storage report. All that stuff. That's what we're looking at right here. And we got plenty of treasury auctions, 4 and 8 week T-bills. We're just going to be considering all this. It's all important stuff to look at. Let me know what y'all think. What reports do you look at? Look forward to seeing y'all's comments, and I'll see y'all in the next video.